Hello guys. In this video I will try just to make sure that beginners like in trading stocks understand that trading business is so different from other businesses. I will give you an example. In stocks, what is the value of the stock today? Now the price that you see, it is its value today. We know today, we know the past, where it was yesterday, the other day, last month, last year, because you see the chart and it gives you the price. Now I ask you a question: what it will be tomorrow? No one knows. This is why stock market is so different from the other businesses. I will give you another business, maybe just for giving an example, a clear example. I always give this example, but I want just to make sure you understand. If you want to do this business, maybe you will be making more money because of this fact. Let's say you are a car dealer. You are buying cheap and selling high cars. Now, how do you get these cheap cars, and how do you know that they are cheap? Now, for the stock, I told you, you have the value of today. Tomorrow you will never know the value. But for the car dealer, they can have two prices. They know the market value that doesn't change very quick. They know it, even if it changes a little bit. So all the people in the market, they know how much is the car. Let's say you buy a car that it is new in a brand name, any brand name, and it is for today, for this year, let's say 2017, and the car is $25,000. So you know the real price of the car when it's new, and you go to a car dealer, you find it with $25,000. Okay, this is the value. But this guy has bought this car $25,000, but he bought it in a huge quantity. He buy 20 or 50 or 100, depending on the car dealer. He will buy it from a wholesaler with 20,000, for example, or 18,000. Okay, so he will make money for sure. That if he gets for 18,000, he will make $7,000 just when he put this car into his car dealer. He will make the money. Now in the stock market, do you find another place where to find Facebook? Now it is, let's say Facebook today is $141. Is there another place that you can find it with 130 or 120? You told me no. So the stock market is different. It's a different market. It's a market that the price change all the time. It doesn't stop. Why? Because traders are selling and buying, and the average is the price that you get each day or each minute or each second. Wherever you go to the stock market, you find that the price has changed. At 9:30 it was like this. At 10 o'clock, 1 minute it changed. At 3 o'clock change, 4 o'clock change. Even the market when it is closed, after that the price keep changing if there are buyers and sellers. Okay, so the stock market is different business. Now the car dealers, for example, they can buy wholesale. In stock market you can't buy wholesale. Okay, second thing, a car dealer they can go to auctions. Okay, auctions where he find cars with lower because of the competition, and so because he has money he can get things with lower prices. But these cars with lower prices, he can get them with lower prices. He knows that he will make money when he sells them in his car dealer. So this is the second option. So this business of car dealership, for example, is so different from stock market. Stock market is volatile and the prices never stop at any price. You can say, please hold Facebook at $141 a share for me for next year. Okay, next year it might be 170 or 160 or $2,000 or $200, or it can go down to $100 or $70 or $60. No one knows. Okay, so you can't stop the price of a stock from going up, from going down. And the people, they have no general idea about one price. Okay, now in the dealership, most of the prices are the same, but these car dealers, they can get cars cheaper and cheaper from these prices. That's why they can make money. Okay, so they understood how this car dealers business works, so they can make money. And all the businesses, they follow a model. They buy cheap, they sell more expensive, and the difference is their profit. Now in the stock market, the prices changes, so you should have a big strategy. You should control your risk, because the price can go down when you buy something. Okay, so in car dealers or dealership, it's not the case. It's not a car that it is $25,000 today. Tomorrow you will find it with $15,000. You can't. Okay, except when it has accident or something, all the value has gone down because of something. So these ideas I'm telling you is just to make you the difference between these two businesses. And stock market, you can do things that no business can do, like in short selling. You borrow shares and you sell them when they are high. When the stock goes down, you buy them again, or you cover back, and then you make profit. Okay? So this will never happen like this in the market. You can't do this short selling in other kind of businesses. You do it only in stock market. Okay? And you see that stock market is unique. Unique, it means there is no comparable market that works the same. So try always to make the difference between stock market and other businesses. Even in investing, there is no guarantee that time will make you money. For example, those people who invest for the long run and they buy a stock, let's say at $20, there is no guarantee after 1 year or 2 years or 3 years, someone guarantee you that this $20 will become $40 or $60 in 2 years or 3 years or 5 years. No one can guarantee this. Okay? If you find someone who guarantees, it doesn't exist in the stock market. There is no one who guarantee a stock to go up. Okay? And even the time, it's not a guarantee. So you ask me, why do people invest then? Okay, they invest because they think that the company will grow bigger and bigger and bigger, and mutual fund will buy it, and then you can make money. But if the mutual fund doesn't buy your company, your company will be going down in price. Okay? So it's not the company that decide for the price. It is the mutual funds and the big guys in the market who or which decide which company will go up and which company will go down. So it is in their hands. It is not in the company CEO to change the price. Okay, it can't. A company that it is $50, they say, okay, next year it should be $100 because I decide. No, it's the market that decide for his company. So that's why the company, they try to make a good job, better earnings, no debts, a lot of stuff like this in order to show that they are good, and the mutual funds, they come and they look at these companies and they buy them, and then the stock will be going up. But sometimes even they go up, sometimes they sell them, so the stock price will be going down. Okay? So understand that in investing, it is not the time that makes the money. Okay? It is the direction of the stock. I give you an example. Let's say a stock, it is $20, and there is a small trend for 2 weeks, and the stock goes from $20 to $30. Just a small trend and then after this trend, after $30, it goes down to $25. So if you buy in this trend from the beginning to the end, you will be making a lot of money. Now an investor, the stock is going up, he will be making money, but since he has no stop loss, he doesn't exit. The stock from 30, it goes to 25, and then maybe it goes to 20. So after 1 year, the price has gone up and then has gone down because he stay a long time, in many years, so he will get nothing from the stock. And a swing trader, for example, he follow the stocks when they move. Okay? So thank you very much for watching this video. Please, if you have comments, comment here on the comment section, or send me a private message. Please subscribe or share my video on Facebook or Twitter or whatever, and thank you very much for watching.